In a world where the truth isn't always what it seems, four masters of real estate step forward to help put the E first in the word true. TREU. Treasure Coast Real Estate Unleashed. And now, here's the fantastic four of real estate with their host, Tom.
All right, good morning, ladies and gentlemen, and welcome to another great edition of Treasure Coast Real Estate Unleashed. And if you're just tuning in, yes, you heard it right. We are changing the way you spell true. Now, besides it being the acronym for our show, the T for Treasure Coast, the R and E for real estate, and the U for Unleash, we wish to focus so much on education that, well, we decided to put the E first in true, T-R-E-U. Now, I did some research based on our last show. T-R-E-U, true, is actually a German word, and the German word means loyal. So what better thing to have an acronym and call the show but for loyalty? Isn't that what we try to ask of our clients, and our clients ask of us, right?
Absolutely.
Loyalty. They want loyalty from their realtor. They want, obviously there's fiduciary, things that have to go on, but, when they ask you for something and they want something, they come to you and they hope to get that loyalty, that trust, the true meaning of what's going on from you guys, right?
So when we picked that acronym, we must have just known somehow deep down that there was something important.
Well, I mean,
about
you know who came up with that, right?
Brain power.
I mean, I'm not going to say that out loud or anything like that, but
whose idea was that?
I think it was some incredibly brilliant mastermind. I think he's up there with like Einstein and Homer Simpson, stuff like that.
Dope.
Dope. All right. Well, we want to gain that reputation in being an honest and truly loyal informational talk radio show with our great panel of expert realtors with over 100 years of experience. And no, we're not talking about Farouk's age. We're talking about the experience level from everybody. I got to throw one of those in there, every once in a while. Every once in a while. Let's, if anybody'd like to call into the show, we got some great topics on today. We have a really great guest that's going to be on with us in a little bit. But if you want to call the show, the number is 772-220-9788. That's 772-220-9788. And real quick, I'd like to just kind of touch base on some statistics for the market and see what some feedback from you folks are real quick. Right now, we're looking at home sales up about 4.9 million for the month over month. And now we're down 0.6% from a year ago, which is up 1% from last month, though, from January to February. Now, you have statistics there as well.
Sure,
well, Farouk, go ahead, by all means.
Of course, in our business, we always speak about a 10-year cycle. And I would like to share with you today, we're really in a seventh year of our cycle. And if we go back from 2006, the median home price sales, and this is from the National Association of Realtors, we had the median price was $221,900. 2007, it went down to $219,000. 2008, $198,100. Then 2009, $172,500. 2010, $172,900. 2011, there we go now, $166,100. 2012, it went up, guys, to $176,800. 2013, we were at $196,800. So now is the time for buyers to get off the fence and get going, to realize that the market is going up, and if you do not get into it right now, then you're going to lose this opportunity right now again in this 10-year cycle. So think what's going to happen in the next 3 years that we have still to come, where the prices are going to be.
Right.
And I'm so happy that we have Chris on today, which is going to give us a great perspective of where the mortgage business is at today.
Absolutely.
Rates are still historically low.
Yeah, they are. And I think right now,
difference.
according to Freddie Mac, and of course Chris who's on here with us, I'm showing Freddie Mac mortgage rates 30-year fixed at 4.39, 15-year fixed at 3.44, and a 5/1 year adjustable rate at 3.15.
Yeah, that's amazing. I mean, I remember buying my first house in the 80s. I paid 10.5%.
Right.
That's right.
And that was considered good
Mhm.
at that time.
Well, hey, without further ado, we got our expert guest on the phone. We have Mr. Bleh.
You did it to him
Hey,
again.
Can't
Chris.
say his
I
name.
didn't say the last name yet. Chris Flaherty with Fidelity Funding Mortgage. Chris, good morning. How are
I'm sure
you?
that reference earlier was to me, right?
Which reference was that?
The Einstein reference?
Yes, exactly.
Ah, you know.
Exactly it. How did you
Brilliant.
know that, Chris?
There you go. You know, just to kind of play off on what you guys were just saying, you know, Carol, you know, I know that you know this, you know, being back in the day, but, you know,
Back in
Andrew,
the
when
day.
you talk about 10%, I die laughing today when I get customers that call me on the phone and they're like, you know, oh my goodness, you know, rates are so high, they're in the 4s.
Right.
And I'm laughing because I'm like, the 4s is ridiculous. This is unrealistic numbers. And I hate to, you know, throw out ages of people on the panel, so I won't do that. But I think it's an important note to note that probably in our entire lifetime, we probably will not see rates this low again, because the sustainability of this is just, it doesn't exist. Because what happens is when people get a mortgage, that mortgage is going to wind up in a mortgage-backed security, i.e. a bond. And if you're a bondholder, you're going to want to turn around and lay your money out there and have it out on the market for 30 years at 1% and 2%. No, you're not going to do that. So the only way that that secondary market piece makes sense is if you can get a greater rate of return for your investor. So when we look at rates now, and Tom, you brought up some, you know, rates even still in the 3s, the long-term sustainability of that just doesn't exist. So we are going to see rates rise. So, you know, Farouk brought up a great point. Hey, you're going to get in right now while the price of homes are at the lowest. Well, not only are you going to do that, you're going to get in when the price of the mortgages are at the lowest.
Yep, absolutely, absolutely.
So,
And, you know, but it's great to have you on here now. How long have you been with Fidelity?
I've been with Fidelity about 5 years.
Okay.
Prior to that, I used to run wholesale operations. So way back in the day, I used to run wholesale operations where I had roughly about 40 direct reports. So yes, I do have experience with adult daycare. And we did between,
Is that where I met you?
that's where it came from. So we used to do between 500 and 700 loans a month. And part of my job was not only did I oversee the sales team, but when a loan came back that was not sellable to the secondary market, I had to make sure that we found a way to make that loan fixable, A, in a legal way, and B, I had to make sure that I trained my people so that this way we wouldn't do that anymore. So I know loans from the back forwards. So I know what underwriters look for. I know what Fannie and Freddie, I know what investors, I know what they're looking for. So that's why I think I throw a much different, more unique approach to this. The other thing that I can honestly say is, if you asked me at any point in time how much money I'm making on a mortgage, I couldn't tell you because I really don't care. My philosophy is always, I have a homeowner sitting across from me. I don't have a paycheck. And if I do a really good job with that homeowner, they're going to get to feel the same experience that we feel when we walk to our home at night. We walk in the door, and it's our walls that we can paint any color we want. It's our bathroom that we can chip the tile out. It's our everything. And there is no greater feeling in the world than that feeling of having that groundedness and knowing that there is your home at the end of the day.
Yeah, like having the guy in the upstairs when you just go and buy a Rocksmith and you plug your guitar in and you open up the windows and you just start banging away at it, and the upstairs guy says, hey, you know what, you need to keep that down. You don't have
Yeah.
that problem when you're in your own house. I don't know who's had that issue, but
Oh, gee.
I think Andrew was the guy playing the guitar
Yeah.
that day.
Or the one sitting next to us here.
yeah, right.
Hey, Chris, I have a quick question for you. We have a lot of clients that approach us on a daily basis, and when we're talking about pre-qualification and, you know, if they've, you know, been to a lender or a bank, they ask us a lot, you know, what's the difference between a bank and a mortgage broker? How can we properly respond to them?
You know, Andrew, that's a great question. We get it too, and let me start off with this. There's actually 3 different types of people out there that lend money. You have a mortgage broker, you have a mortgage lender or a mortgage banker, and then you actually have the banks. A mortgage broker is somebody that you sit with, and they're going to package up your loan, and they're going to send it out to individual different investors, whether it be a bank, whether it be a wholesale channel, things like that. And the problem with that is that if they are thinking in their mind, hey, listen, that this investor is going to take your loan, and they send it up there, and then they say, hey, no, I can't do it. They have to get the loan back, repackage it, send it out to somebody else. Then on the far end of that chain is a bank. And with a bank, a bank has their own set of guidelines and rules. Like everybody thinks that, okay, everybody has the same guidelines, and they don't. What happens is you have Fannie Mae guidelines, you have Freddie Mac guidelines, you have USDA guidelines, you have FHA guidelines, and VA guidelines. But on top of those, banks can put what they call a lender overlay on it. So like Bank ABC might say, hey, listen, we understand what Fannie's rule is, but we want to be a little tighter there because we don't have a good experience there. And Bank XYZ might say, hey, I'm okay with that, but I don't like this. In the middle of those two are the mortgage lenders or the mortgage bankers. And the mortgage lenders and the mortgage bankers, the way we work is we underwrite our own loans, we clear the conditions, we print the package, we fund with our own money, and then at the end of the transaction, that's when we're going to take and have that loan finally placed with who it's going to be with. The beauty of that situation is this. If I place a loan into my company and say I was thinking initially, hey, XYZ, and we find out something through the transaction that's not going to work, well, we can go ABC. It doesn't cut any time out of the transaction. It gives us more flexibility, and things change from time to time. So I've had situations where we're about halfway through the channel, and all of a sudden, hey, this lender loosened up, or they want to start buying the market, so I'm able to get my customer a better rate. So that's where I think we have more flexibility right now, where, a lot of times people are saying the bankers, the actual mortgage, the banks out there are cracking down. Well, they're right. The banks are cracking down, but they're also, there's another piece, and we'll probably talk about it later because it's something that I definitely want to discuss, and I'm hoping somebody brings it up, but the mortgage brokers, there's a lot of pressure right now on the mortgage brokers. So that's the difference between those three.
All right, great. And if you're just tuning in, you're listening to TREU Radio, TREU Radio, Treasure Coast Real Estate Unleashed. And if you'd like to call in and have a question for our panel of expert realtors or Chris Flaherty from Fidelity Funding Mortgage, give us a call at 772-220-9788, 220-9788. And we have our panel here. We have Scott McAllister, Farouk Ali, beautiful Carol Morgan, and Andrew Sesta, our realtors here with us that have just an amazing amount of experience and really have the opportunity to take what Chris is saying and put it into their daily lives of helping consumers. And Carol, I know you've, I talked to you briefly, you know a lot of stuff. Every time I talk to you, you amaze me.
Years of experience.
Yes.
Years
Well, not a lot of years, just enough.
Just enough.
just enough to make it right.
33-year-old girl.
I'm sorry, Chris, what'd you say?
All crammed into a 33-year-old girl.
Oh, God, I
there
wish.
you
Oh,
go.
I wish. Oh, I wish.
I would be sitting on the other side of Andrew.
Okay, now, and with the uneventful turn of events that is going on here, we know that we've had an unfortunate turn of events as far as the real estate market has over the last 3 to 5 years. There's been a lot of bankruptcies, foreclosures, and short sales. Can someone who has had one of those issues still get a home loan today?
It's funny, Carol. If you and I were talking and we were just having lunch probably about a month and a half ago, I'd say to you, yeah, you could, but we're probably staring at 3 years, and then you would have brought up the conversation with me. But I've just heard about this great new program that FHA has, and it's a fabulous program. And all of a sudden now, somebody that's 1 year out is going to be able to do it. And then I would have said to you, yeah, that's fantastic. And if we could find that needle in the haystack that's going to fit into that scenario, then it would be great. But then, lo and behold, like I said, I've been doing this for a long time. So in my past, I ran across a bunch of people in the secondary market. And back in October, I was having a conversation with a good buddy of mine, and he's with a hedge fund. And I said, there's a lot of these people who had a bankruptcy, who had a short sale, who had a foreclosure, that forget about the needle in the haystack scenario. These are real life people that had real things happen to them, and they should get a loan. And we started talking and discussing it, and I said to him, a lot of these people actually have money. And the more we started talking about it, the more he started getting inclined, because his hedge fund has billions with a B of dollars. And he came back to me in January, and we started dialoguing a little bit, and they put together a program where I could do somebody one day out of bankruptcy, one day out of short sale, one day out of foreclosure, and we can get him into a home now. Now, we're not talking about, maybe some of Andrew's relatives that are going to come in and, maybe lend you the money at crazy rates.
I was waiting for that.
We're talking about, somebody who, when they get one of these mortgages, it's going to be a 30-year fix. It's going to report on their credit report, and it's going to have no prepayment penalty.
Wow,
So
that's amazing.
it's a great opportunity, I think, for people to get in. Like Farouk was saying, now, while the prices of homes are
There's
lower,
no
what
excuse.
everybody-
There's no
what everybody's
excuse
gotta
now with stuff
remember
like
is-
that.
Yeah, but our taxes are going to be based on what we pay for that home today.
Yeah.
So
Right.
if you wait the 2 and 3 years, you're not only are you saying, okay, well, I don't want to get into one of those type of loans. I'll wait until I qualify for a regular one. Well, everyone else is waiting too.
Yeah,
So
and while
all
you're
of a
waiting,
sudden
you end up
it's-
spending $20,000, $30,000, $40,000 more for the same house that you were looking to buy.
A
So,
lot of people don't look at all the factors, like you just mentioned, the taxes, the homestead exemption, and
Yep.
like Farouk said, the prices, and
Yeah.
I mean, right now if you're waiting for all the planets to align, they've
Yeah.
aligned, and
Yep.
it's
Yeah.
time.
Yeah, they have. I think maybe Chris, you should probably let the public out there know what a prepayment penalty is. I mean, I'm sure that there's a lot of people out there that don't know today
Yep.
what that is.
Great.
Would you like
A
to explain that?
prepayment
Yeah, let's actually we'll take that for the other side of the break, Chris, and when we come back, we'll talk about prepayment penalties. And you're listening to True Radio, TREU Radio, Treasure Coast Real Estate Unleashed. We'll have a word from our sponsors, and we'll be right back.
Customer service and great rates. That's what you get with Atlantic Insurance Advisors. Remember, everyone's just one torrential downpour away from a flood. And with rates as low as $129 per year, why would you not get coverage? Call 772-233-4444 or email flood@atlanticinsurance.us and save hundreds on all your insurance needs. That's 772-233-4444, 233-4444 for Atlantic Insurance Advisors. Are you selling your home, wondering how you're ever going to move all your belongings? Well, don't wonder. Call the trusted moving professionals from Mr. Small Move. Their staff of full-time movers are ready to take the stress out of your next move. Mr. Small Move will safely pack, move, then place and assemble your belongings at your new location. So if you're moving, call the trusted professionals at Mr. Small Move. For a free estimate, call 283-5540. That's 772-283-5540 for Mr. Small Move. Has a recent foreclosure, bankruptcy, or short sale spoiled your credit? Fidelity Funding may be able to help. Their hometown lenders are specially trained to work with your credit history to find the perfect loan program and get you back on track. Even if credit is no problem, Fidelity Funding offers many dynamic loan programs. Call Fidelity Funding on the Treasure Coast at 772-237-5211. They work day in and out with realtors in your community to find you the house you love. Call 237-5211 for Fidelity Funding. Every 13 seconds, a home intrusion is committed in the United States, with property loss totals in the billions. Take action today to prevent it from happening to you with ADT, protecting homes and businesses for more than 136 years. Protect Security is your authorized ADT dealer on the Treasure Coast. Call Richard Stratman today at 772-708-2691. Protect Security and ADT, offering peace of mind security 24/7. Call today, Protect Security, 708-2691. Dramatic change invites invigorating new energy. Let Decorating Den Interiors create a dramatic change in your home's decor. They'll create a look that's important to you. Begin your home's gorgeous transformation by calling Decorating Den Interiors on the Treasure Coast at 692-8589. Visit their waterfront design studios on Southeast Osceola Street, downtown Stuart, and online at stewartdecorator.com.
I want to let that music play. It's just so upbeat and exciting. I really enjoy that. Glad we put that together. And we have Mr. Cliff Desmond from WPSL Port St. Lucie to thank for helping out with that and putting that whole thing together.
Great job, Cliff.
Yeah, absolutely. Correct. Cliff has actually been with me since I started my other radio show 5 years ago. And there's actually that show is actually playing here on STU 1450 tonight at 6 o'clock. And we have a great show on there. And what we're doing is actually taking, we're talking about buying, selling, and investing in real estate here on TREU Radio. And what we're doing is actually, well, after you buy that home, you sell that home or you invest in it, well, Comfort Time Live helps you to kind of find that castle in that home, to make it comfortable, to make your lifestyle comfortable by having some of these people and, the contractors and the tax people and the businesses that are kind of after the fact. A lot of what we talk about is kind of a little bit before and during and slightly after. So this helps to kind of take care of the kind of home and lifestyle improvement afterwards with Comfort Time Live.
And you had Zig Ziglar on there a couple weeks ago, didn't you? I was listening.
Oh yeah, yeah. Richard Stratman, one of our partners with Protect Security, ADT authorized dealer. He's on there, and I tell you, he looks just like Zig Ziglar, and he has the personality of Zig Ziglar too.
Absolutely.
He does. He's a great guy. So if you're tuning in, we're actually talking with Chris Flaherty from Fidelity Funding Mortgage. And before we went to the break, we actually had a question. Carol had a question from Chris regarding what was the question again?
To explain the prepayment penalty.
There you go. You can see how my attention span is.
There's a lot of people out there that don't know what a prepayment penalty is.
So go ahead. What was that, Chris?
A prepayment penalty is basically what an investor is saying is, I'm going to make sure that I get my money regardless of how long you keep your loan. And basically, that's in layman's terms. What it boils down to is this. If you sign a mortgage and that mortgage has a 3-year prepayment penalty, what the investor is saying is, if you get out of that mortgage after 6 months, 18 months, 24 months, anything before 36 months, the balance of the time, so if it was 6 months in, the balance of that time on the 36 months, that remainder of the 30 months, you owe that amount of interest. So whether you have the mortgage or you don't have the mortgage, you're committing to them that you're going to pay that amount of money. And sometimes that amount of money becomes a lot of money. And it really locks the customer in to where they say, it doesn't make sense for me to refinance at this point in time because I'm locked into that. And by having this new program out that does not have a prepayment penalty, we can get these people that maybe have another year to go or a year and a half to go before they would qualify for a conventional type loan. We can get them into that home now. And, it's been very, very interesting as we go through and we talk to people. We start talking about rents versus, buying, and even at, the higher rates, even when, when it was like, Andrew's Cousins type rates, even in those scenarios, it still made sense to buy versus renting. So now is a very, very good time.
Awesome. And so now we had a question. You were going to say something? Well, no, I thought Andrew, you had mentioned about something.
Oh yeah, we were talking about. I want to get back to what you were saying about the bank overlays, Chris.
Yeah.
I had a situation actually in December, the week before Christmas, where I had 3 families that were buying homes through FHA, and every single one of them that week before closing came up with this special overlay. So can you just touch on those overlays?
Yes. What happens is, Fannie Mae, Freddie Mac, FHA, they set a set of guidelines in place, and that's basically like, okay, here's a set of rules that you want to go by. And the easiest way to think of it, if you're a consumer, is this. If you live in Port St. Lucie, you have the laws of the land. Okay, that's your overall laws. But if you buy in a gated community, they're going to say, hey, we have additional rules here, like you can't have a pickup truck parked in your driveway, or you can't park on the side of the road overnight. So they have like additional rules that they kick into place. Well, the lenders do the same thing. Like some of the banks, they will say, hey, listen, I understand FHA's rule is this, but we now have another rule on top of that. For instance, like some of the banks say, okay, if a home is purchased and it's purchased by an investor, and then a month and a half later, that investor turns around and sells that home. You know, we had a customer the other day come into us, and they said, hey, I was turned down at a bank because that bank is saying that you cannot buy this home until that investor has owned it for 6 months. Well, that's true with that bank. That's not necessarily true with all banks.
Exactly.
Because I could do one if an investor buys a house, turns around and sells it 2 days later.
Right.
So that's just one example of overlays. Another example of overlays would be, you know, debt ratios. What debt ratios one bank says yes to, another bank will say no to.
Right.
So it gets very complicated in this little world that we're living in now. And the world is, let's try and figure out what just happened and what went wrong, and what can we do to make sure it doesn't happen again. And a great analogy I heard was, it was almost like everybody was at the beach swimming, having a good time, and all of a sudden the tide went out, and now we see who's swimming around with no swim trunks.
Hi, Chris. How are you? This is Farouk.
Hey, buddy.
How you doing? Good. How is that new ride coming along?
Good, very good.
Awesome.
Very, very good.
awesome. Chris, just to go back on one thing you had said earlier, with the new program, when would it be rolling out? With one day out of bankruptcy and one day
Actually,
out of
we
foreclosure?
rolled that out already.
Oh, really?
It just happened last week. So it's back to we're back to real old school. You know, kind of like when you and I got in the business.
Sure.
It's back to old school where we traditionally grade people. So what we have to do is we actually physically have to get the very particulars of their file. There is no like cut box per se that we can say, hey, listen, if you have boom, boom, and boom, you're slam dunk done. What we do is we get all the parameters, we put it together, and that's where I go to town, put on my boxing gloves, and get with my buddy and say, this is why we need to do this deal, and here's the strengths of this file.
Chris, is this a Fidelity program only, or it's widespread?
It's not widespread. No,
Okay.
it's not widespread at all. This is a unique product. It's with the investor is a hedge fund, so they're not looking to have everybody on every street corner doing it, because, like I said, it's a very unique program, and it takes a lot of experience to know what they're going to be looking for, what they're not going to be looking for. Because I have that wholesale experience, they've reached out to me on this one because I know how to traditionally grade a customer, and that's why I can not waste their time with just throwing every single person up against the wall.
Chris, one of the things we do at FL&Y Properties, my team with Keller Williams, is that we do not take buyers out unless they're pre-qualified. And in one of our counseling sessions with a prospective buyer, we find that sometimes from time to time they have derogatory credit. Would that be the type of individual you would want to counsel with and help them to get their credit together so that in the future they can buy? Do you help them in walking them through the whole process? Because it makes a lot of sense for us not to take buyers out that is not qualified at this time. Obviously, the best thing to do is to take them to an expert like yourself or someone on your team to assist us with that process.
You know what? And I'm really, really glad you asked that question. Absolutely, I definitely do. You know, one of the things that I think is really important for everybody to understand is every single one of us right now that's sitting here talking on the radio, we all live in this area. So, which means we're going to go to Home Depot, we're going to go to Publix, we're going to go to Lowe's, we're going to bump into all these stores, and we're going to bump into the people that we're talking to. You know, I'm not an 800 number that's going to basically try to rope somebody in and say, oh, yeah, you can do all these great, wonderful things because I don't have any skin in the game. I'm going to bump into you at some point in time, you know, in the time frame that you're going to live here. So what I do is I love to sit down with clients, go through, help them out. We have a client that we just closed yesterday, okay? We had been working with him for 1 year. When he first came in, he sat down with us. Basically, he just got shot through, and we looked at his credit report, and it was like everybody under the sun pulled his credit. It was local banks, it was 800 numbers, it was the www.IGotAlyingStoryForYou.com, but nobody wanted to take the time and explain to him. And nobody wanted to take the time and say to him, if you do this, then you will get a home. Well, we went through that with him, and 3 months later he came in, and quite honestly, he had done nothing. And he asked us, okay, here we go. Well, we sat down and we pulled his credit again. It was like, you haven't done what we told you to do. So finally he understood that at that point it's like that your problems are not just going to go away, but work on these,
Chris,
and then we can
if
get
you
to
don't
the
mind
home.
me interjecting quickly, Chris, because I don't want to lose my train of thought here. Just interject when you said several people at companies have run the individual credit. Does that affect their score when the credit is pulled so often? Because sometimes it's people always tend to think that the score will drop after the credit is pulled several times. Could you explain how that works?
Yep. If everybody is coded as the same type of lender, and what I mean by that is this: if you're going and you're shopping for a car, and they're coded as automobile, and everybody is coded as automobile, if you have 5 pulls in one day and they're all automobile pulls, it won't affect your credit. The problem is not everybody is coded as that. Some people are coded as mortgage, which is supposed to be like in my business. Others are coded as banking. Others are coded as retail. And if you have banking, mortgage, and retail, that's going to be 3 different pulls, which for each pull is 3 points on your credit.
Ouch. So if you did that in one day with 5 people and they were all coded differently, boy, you just took a big hit on your credit score.
Right.
Oh yes, 1 point makes such a big difference in your FICO score.
Wow, that's a bit of information I didn't know. I mean, that's really interesting. I thought, like everyone else, every poll hit.
Yeah.
That's really good to be able to explain to people.
And I think, too, Chris, as far as pre-approvals go with buyers, you need to let people know out there, for us as realtors, we cannot even present an offer without our clients being approved today, either by proof of funds from they have funds in the bank for money to cover a closing, or that they've been approved for a mortgage. And I think that, that's a very important part that people need to understand today. Don't call us if you've not been approved, and don't get your feelings hurt because we're asking you to. It's because we cannot present an offer.
Well, I don't want to pay somebody $300 or $400 to give me a tour guide of Martin County. I could do it for free with my realtor, right?
There you go.
Well, it's funny. We were talking about it earlier about, the lender overlays. And there's a lot of investors in this county, and they're local people that live here, work here, everything. And what happens is they come to know who's got what overlays. So I find that a lot of these people come walking into me, and Carol, you hit the nail on the head. These guys, they want to make sure before they even entertain an offer, they want to know that it's for real. They want to make sure, and I think people need to really get an understanding of this. Would you want your home tied up to where nobody else could buy it for 30 to 45 days, and then all of a sudden find out that, that person doesn't qualify, like Andrew was talking about? No, you wouldn't want that. So,
and I've seen that happen. I mean, I've seen sellers packed up in the truck, house empty, and 2 days before closing, they find out that the lender, couldn't do the loan, and that's tragic.
Well, Andrew, real story. I had for a week a moving truck parked in our parking lot. The people came to the closing because I happen to be located with the title company, and the title lady comes walking down and she goes, "You need to help these people right now." And I go, "What do you mean?" She goes, "We were all set to go, and this lender just told them they don't qualify." And I was like, "Well, wait a minute. How'd they get to the closing? How'd they get the package here?" And it's like, she goes, "I don't know, but they don't qualify." The lady was sitting there with tears in her eyes and her dog in her lap, looking at me, and now it's like, okay, the reality sinks in.
Right.
And, the person at the other end of that 800 number where she got the mortgage, they're not looking at the client anymore. They can't get that person on the phone.
That's right.
Right, and that's why that's why we decided to put this show together, True Radio, and because just like that is a perfect instance of somebody, the client trusting in the truth of the lender and finding out that what they really saw as the truth was not really what it was, and they got taken advantage of. And that's why these 4 realtors here, Scott McAllister, Farouk Ali, Carol Morgan, and Andrew Sesta, decided to step up and help educate Martin County and the surrounding areas, and also the thousands of listeners that are going to be getting on YouTube. This isn't proprietary to Martin County. A lot of this, check your own state laws, but a lot of this is just pretty much anywhere in the United States. And I think it's key. And before we go on with a couple of questions, don't forget now next week on True Radio we have some more special guests. Our special guest next week is going to be Mary Beth Zipser from Atlantic Insurance Advisors, and we'll be talking about home insurance and the importance in the real estate market. And then also on February 20th, we will welcome Kimberly Perrin with Decorating Den. Now, sometimes it can be very difficult, and I'm sure you folks see this all the time. It can be very difficult for somebody to find that perfect home. Scott, you were talking about they want to change the carpet, they want to change this. Well, you can find a general layout that you love, so you don't have to make major renovations. But then you find somebody like Kimberly Perrin with Decorating Den who could come in and make that your dream home. So she's going to be joining us February 20th. And Scott, before we get to, I know you got a couple questions for Scott. Scott's the mastermind of the construction and stuff because he grew up, so he's got some great questions for Chris when it pertains to that. But we're going to go ahead and take another quick break to hear from our partners. You're listening to True Radio, Treasure Coast Real Estate Unleashed, with your panel of expert realtors. I'm Tom Platania, your host, 772-220-9788 if you have a question.
Are you selling your home, wondering how you're ever going to move all your belongings? Well, don't wonder. Call the trusted moving professionals from Mr. Small Move. Their staff of full-time movers are ready to take the stress out of your next move. Mr. Small Move will safely pack, move, then place and assemble your belongings at your new location. So if you're moving, call the trusted professionals at Mr. Small Move. For a free estimate, call 283-5540. That's 772-283-5540 for Mr. Small Move. Every 13 seconds, a home intrusion is committed in the United States, with property loss totals in the billions. Take action today to prevent it from happening to you with ADT, protecting homes and businesses for more than 136 years. Protect Security is your authorized ADT dealer on the Treasure Coast. Call Richard Stratman today at 772-708-2691. Protect Security and ADT, offering peace of mind security 24/7. Call today, Protect Security, 708-2691. Has a recent foreclosure, bankruptcy, or short sale spoiled your credit? Fidelity Funding may be able to help. Their hometown lenders are specially trained to work with your credit history to find the perfect loan program and get you back on track. Even if credit is no problem, Fidelity Funding offers many dynamic loan programs. Call Fidelity Funding on the Treasure Coast at 772-237-5211. They work day in and out with realtors in your community to find you the house you love. Call 237-5211 for Fidelity Funding. Customer service and great rates. That's what you get with Atlantic Insurance Advisors. Remember, everyone's just one torrential downpour away from a flood. And with rates as low as $129 per year, why would you not get coverage? Call 772-233-4444 or email flood@atlanticinsurance.us and save hundreds on all your insurance needs. That's 772-233-4444, 233-4444 for Atlantic Insurance Advisors. Dramatic change invites invigorating new energy. Let Decorating Den Interiors create a dramatic change in your home's decor. They'll create a look that's important to you. Begin your home's gorgeous transformation by calling Decorating Den Interiors on the Treasure Coast at 692-8589. Visit their waterfront design studios on Southeast Osceola Street, downtown Stuart, and online at stewartdecorator.com.
All right, welcome back, ladies and gentlemen, to Treasure Coast Real Estate Unleashed, True Radio, TREU Radio. And today we're discussing the mortgage industry. We have special guest Chris Flaherty with Fidelity Funding Mortgage on the line with us. And don't forget our special guest coming up in the next week. We have Mary Beth Zipser from Atlantic Insurance Advisors. And then February 20th, we have Kimberly Perrin with Decorating Den. And what we're here today discussing is, well, obviously in order to get a home, a majority of us, I would say probably an 80-20 rule. About 80% of the people have to finance, 20% of it have enough money to just stroke a check. But so, and just about everything you want to focus on the 80%. We'll talk about the 20%. But I tell you, with all the foreclosures and bankruptcies and everything, I know there's there's got to be some weird stuff going on out there. And Scott, your family just basically grew up in the construction industry and a real estate business, right?
Absolutely, and even this past week, I'm working with a number of first-time home buyers who are looking for foreclosures or really good deals so that they can get in. And I've been previewing a ton of houses, and what I'm noticing a lot of last night, this house was totally vandalized. The air conditioner that was taken, coppers ripped from the walls, a lot of these problems, water heaters gone. So when you have those issues, I know that there are some stipulations with mortgages. Can having these items missing be a hindrance to getting a loan?
You know what? That's a great question. It's going to really depend on what type of a loan we're talking about. Some things that are very, very weird is on a VA loan, if the house has a spot for a dishwasher and there's no dishwasher, you're going to have a problem. And that sounds so weird. You're like, what does a dishwasher have to do with it, when you don't need a refrigerator? So, like on a VA loan, they want a dishwasher and they want a stove. When you're talking about...
But no refrigerator.
No refrigerator. Refrigerator is considered personal property by the Veterans Administration.
So it's okay if you don't eat, Mr. Homeowner, but we want to make sure that you can wash those dishes.
You can wash the dishes, exactly. Now, on an FHA loan, you can have no appliances with us. Now, I know there's other banks out there that if you don't have appliances, you're dead in the water.
There goes the overlays.
But Scott, now we're going to take this a whole step further here. I think one of the reasons why, some realtors are really successful is communication. And communicating with the lender and saying, hey, listen, on my customer that you gave me the loan commitment for, what do I have to be careful for and what do I have to watch out for? And that's when you and I, Scott, would talk and you'd say to me, hey, Chris, I'm working with this customer, and I say, okay, Mr. Jones, he's a conventional loan. On a conventional loan of this caliber, I don't care if there's any appliances in there. And then you come back and say, well, Chris, it's not really just appliances. It's kind of missing a kitchen. And that's where, the good thing for you, Scott, is this. Being a background in there and your loyalty that you have towards that whole construction process, we are rolling out, we're in the process right now of rolling out 5 different levels of construction loans.
Right, Chris, did you say a house not having a kitchen?
Yeah, man. Like for real. Like
How can a house be built? I mean, I know Scott, myself, and Andrew definitely wouldn't buy a house without a kitchen. But
well, let me just throw this one at you. A realtor called me, and she's like, okay, I'm standing in a house, and the customer fell in love with it. And she said, and what they want to do is they want to buy the house, but I think we got a small problem. I'm like, well, shoot me a quick pic. She shoots me a picture, and it comes over, and there's literally no kitchen. It's 4 walls. And I'm like, whoa. And she's like, yep, when the people left, they took the cabinets, the granite, the appliances, because a lot of people have this attitude of, I paid for all this stuff, and I'm not getting any money back, and I put X amount of dollars into this house, so I'm not leaving it here. I'm taking it out. Whether I can use it or not, I'm taking it.
I've seen them take the toilets.
You guys have seen a lot of this.
Bathtubs. Oh, yeah.
Chris, last year I had a closing, a first-time home buyer, FHA. In the kitchen, we had a tile that was cracked. My closing was set back 2 weeks because the seller was out of town, and it was also a short sale. And they will not close unless we replace that tile. Unbelievable, I couldn't believe it.
Cracked tile?
A cracked tile.
A cracked tile in
Wow.
the kitchen, just one cracked tile. And the FHA appraisal wrote it up like that, and the lender said that's one of the conditions to close. You have to satisfy that. How practical is that?
One of the things that I think we see is, with us, we're very fortunate. Our lenders are all local, very experienced people. But when you're dealing with a lot of these 800 number type situations, they're calling in appraisers from all over the place. And some of these appraisers, from what I'm finding out from different people, what they're doing is they're trying to make sure that that bank knows, hey, I was really there. I did such a great job. I even noted the cracked tile in there. And the reason why they're doing it is because the 800 number banks and the big box banks, they're paying such a small amount of that appraisal fee to the appraisers that these appraisers have to do 2, 3, 4 times the amount of appraisals to make the same kind of money they did before. So, luckily for us, you know, being that we're a little bit more of a small to medium-sized player, our guys make the lion's share of that appraisal money, and so they are going to go out and do more of a professional job, not a nitpicky, I'm going to show you to make sure you know I was there type of a job.
Exactly.
Great.
Right.
One of the things I'd like to bring up, we've been talking a lot and talking about buyers as far as, you know, because that's who's going to be wanting these loans. But Farouk had brought up earlier how the prices are going up and people are asking me, is it a seller's market or a buyer's market? And you know, it's definitely transitioning from the buyer's market into a seller's market, but we're still on the cusp there. And as you were saying, with all the moons aligning, I think sellers need to be cognizant of the fact that they might want to, oh, well, maybe I should wait and get more money. But what if what if these historically low rates you're talking about go up?
Right.
The buying power of these buyers is now reduced, and now the amount of people that can purchase your
correct.
property are not there.
Good point, Scott. Really
Yeah,
good
it's
point.
like you catch 22 with them, because if they wait too long, buyers aren't going to want to jump in now because prices are too high, interest rates are going up, and now even the sellers has lost their chance.
Yeah,
And
but not
we're
only-
still in the cusp between the buyer-seller market. I mean, we're still kind of on that edge right now.
Right.
And it's still a great time for a seller to say, okay, it hasn't swung all the way over to a buyer's market yet. I still do have some control. I still have some bargaining power here within being realistic. And we
Right.
can come to terms more easily working both sides that way than we can by just worrying about what the price is going to be.
Exactly.
And a lot of times, I like to bring up to the sellers that, you know, they don't realize that, you know, they want to wait a couple of more months or a year or so to make more money on the house. But I always try to get to the root of where they're going,
Right.
because, you know, what are they going to buy? That's going up as well. So a lot of times it's better off to take advantage of the low interest rates, locking in your homestead, you know, at this price, than waiting next year and getting $20,000 for your current property, and you're going to pay $20,000 to $30,000 for what you're going to be buying, unless you're going to pitch a tent at the park or something.
Well,
I
it's,
mean, that's the
it's
way
called
gonna
you
happen.
buy a little, you sell a little lower, but you're also buying a little lower. So
Exactly.
your
Right.
losses,
Exactly.
they even themselves out.
You're transferring your equity. That's what
That's
I
right.
like to explain.
Yeah, absolutely, absolutely. Now, Chris, what other stuff is happening? You talked about the January 10th. What other kind of stuff is happening with that? That's
Okay.
just kind of really changed. I guess you could say just kind of changed the world around.
Yep. Well, what happened was this. Everybody has heard of Dodd-Frank, correct? I mean, it affected
I
a
dated
lot
it
of different
once.
things.
Oh my
when,
God.
when the Dodd-Frank bill, I'm going to go right over that one. When the Dodd-Frank bill passed, there were a lot of things that were inside that bill. One of them was the creation of what's called the CFPB, that's the Consumer Financial Protection Bureau. What they did was they also instituted some certain guidelines that they wanted to see carried through. Well, the interesting thing was Dodd-Frank got passed, but there was no funding for this CFPB. So eventually they got around to getting some funding money for it, and now that they're funded, now they're going to start instituting some of these programs. And one of the programs and one of the things that they wanted to make sure happened was we're not going to get into the situation again. And, you know, you guys were just talking about what happens if something changes and rates go up. Well, something did happen, and it is going to slow the market down a little bit for the people that don't have a good understanding of what happened on the 10th. What happened on the 10th was we had something instituted called QM, which is a qualified mortgage. Now, this is very important. On a qualified mortgage, what it says is if your debt ratio, which is your back-end ratio that they're looking at, which is going to be your principal, interest, taxes, insurance, and all of your other bills combined, okay, if that ratio goes beyond 43% of your total income, okay, red flags are going to be flying, okay? Well, at the banks, they didn't just fly the red flags, Andrew, and which could have been one of the reasons why you had a holdup at the end of December, is some of the banks started trying to interpret that language and bring it into play a little quicker.
Right.
And what they did was if you go beyond that 43%, they basically throw up a red flag and say, if you are beyond this 43%, now the lender has to make sure 5 other things happen. And
Hey,
what
Chris,
they're trying to make sure,
we're gonna have to cut you short on that response. I apologize. We're running out of time here. But
problem.
hey, we're gonna have you back on. Don't worry about that, because you got, I mean, you got a million things of great information to provide to us, and I want to thank you so much, and I think the
No
panel
problem.
wants to.
Thank
you
you,
guys.
Chris.
Thank you,
It's been
Chris.
very informative.
Appreciate it.
Yeah, I really appreciate it, and we're definitely going to bring you back on the show, and we'll make sure we let our listeners know that Chris Flaherty with Fidelity Funding Mortgage is going to be back on, because we really need to hear a lot more about that change that happened on January 10th, and we'll make sure that happens. But if anybody wants to contact any information about Chris and Fidelity Funding Mortgage, you can call us here with our team of realtors at 772-882-5700, and we'll direct you to the right individual to get in contact with Chris Flaherty so that we can make sure that you have any questions, we can do that. So, guys, great show. Chris, again, thank you very much. Guys, excellent show. We're out of time.
Yeah.
On
Real
behalf
quick.
of the group, I would like to wish you a belated birthday.
Oh,
greeting.
thank you.
Birthday, Tom.
Happy birthday,
Tom.
Tom.
All right, hey, here's
We
our
don't
word
sing.
of wisdom by Zig Ziglar. It was character that got us out of bed, commitment that moved us into action, and discipline that enabled us to follow through. So, another great show, another great quote. I want to thank everybody for listening, and don't forget us next
Thank you.
Thursday morning at 10 a.m. We'll have Mary Beth with Atlantic Insurance Advisors. There you go. I'll spit that out. All right, everybody have a great day and a great
You too.
weekend, and we'll
See you
see
then.
you next week.